Good morning, everybody. This is Dee Dee with Power 3 Trading. I'm not here just to teach you some strat techniques, but I'm also here to help you profit from those techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith, at Smiths in the Black channel, Rob in the Black on Twitter, and at Sepia Group. So yesterday we had a couple of trade ideas. So we're going to talk about this, what worked for me and what didn't work. Well, Home Depot and Tesla. So I'll start with, let's start with Tesla. So we drew our broadening formations on Tesla. Let's put that back on the 90. We drew our broadening formations on Tesla using the 90, I believe. Let's make sure I get the right one up here. Yeah. All right. So let's see if we can figure out where we drew these lines. Okay, that was at 18 minutes. Should have drawn that a different color. Let me just do that right now so we can talk through this. Okay, so this was the 18-minute here. Must have added some lines. I know I did. This was this 18-minute here, from this 3 bar to this 3 bar. That's that blue line. Then we had, because Tesla was gapping up, so we drew our lines to the upside, and then we drew this horizontal line here off this inside day. And then we had these two down days, two down days right here. It's hard to say. 2 down, 2 down. So we drew that as our lower broadening formation. This was our upper broadening formation from this 2 down bar to this 2 down bar, because we were trying to get back inside. We were trying to trade back inside this range. But remember, we are still inside day. So that's why we had all these lines on the chart. And then I drew additional lines, I think, later. So this was intraday. These may have been intraday moves. So I'm just going to delete these for now. And then not sure what that line was, so I'm going to take that one out. All right, so we had our bottom broadening formation, then we had our upper broadening formation, and we said if price continues to trade up through this range, it would have to take this level out here because we're inside this outside bar. So that was our broadening formation that we drew. And then I added this 18 outside bar here, and then I added this outside bar here on the 18. So how did it work? We said we were going to short below 719. Well, it never got there, so there was not a short here. And then we wanted to go long above 748. And so again, waiting for price action to 18-minute close, and this is what it looked like. So if you're trading on a shorter time frame and you're looking to get into Tesla, this would have been a hard entry because you didn't really have a signal. You had this outside bar in the second 6-minute candle, right? Then we had our inside bar. So this is where, right, this candle right here at 10:06, this is where we want to take our entry, because I'm looking at the 18-minute. So we don't trade in this first 15-18-minute range. Then it went inside. Once it goes inside, then I'm looking to take the low of this range. We got an inside bar here. Take this short. You're right inside. You're short here. It hit. I didn't trade this well though, guys. It hit this range here, and I hesitated to get out. Then it went 2 up. Then it went 3. I actually, and the options were expensive on this. So I didn't get a good entry, didn't get a good exit. The volatility, implied volatility, if I recall, on Tesla was somewhere in the 70s, a little high, so the premiums were high. Honestly, I lost money on this trade. I got in this range. I did not exit here. but then it started going back up and I was like, oh, great. So it's still inside this 18-minute candle. I didn't like the move. So I exited it only for it to come right back down. So I got back into the trade and I covered here. So I made up for that loss. But just frustrating. And then we had this reversal here, got back in this move right in here. But frustrating. This is what Rob would call a country and western. But yeah, I didn't like the way I traded it, even though I was able to cover on that move going back down. But this was a TTO right here, outside bar on this 6-minute candle with the 2-2 continuation to the downside. So just know that these, what we call subtriangles, are going to happen. And that's what happened here. Had I been patient enough, but the reason I exited was because of the options. The option was so, like I said, that was not good, not a good price on these options. And so I look up and I'm down, you know, 1% on my small account, and I was like, oh shoot. And so I'm really trying to hold on to trading in that small account, but I can see the difficulty people have when you're trading in these small accounts. You don't get a lot of wiggle room. And so my mindset was, oh, well, if I only have, now I think I shared with you guys, so I started that account with $1,000. So I got it up to about 6,500 in a couple of weeks, trading Tesla primarily. But understanding that with Tesla and the price of those premiums, you have to be careful that you may only get 1 or 2 good trades. And so we were able to cover here yesterday. But here's what happened that that took my profit though. I don't know if you guys got caught in this. Note to self: always know when you know, the Fed is speaking. I didn't realize I'm in this trade long here. So I'm holding this trade long. Got back in actually right here. I got this in here, 322, only for this thing to come up and come right back down. So I actually lost money on this trade. And then I don't usually watch TV during the day. And so I turned it on because I was like, what the heck is going on? So that's that's what happens when you're trading alone. You're not a part of a community. Someone probably knew Fed Powell was speaking and he was talking about interest rates. And I was like, ah. So anyway, so lost money here on Tesla on that trade. So I just wanted to share that with you. My goal for this small account, what I was trying to do in it was see how I could trade Tesla, and because I want to write a book about it. I want to just trade Tesla for 12 months in that small account to see how I could trade it and share that story with people on how they can go from $1,000 to whatever, and just trading Tesla. And yeah, so yesterday I actually got caught. But listen, guys, this is an inside day. And so it could be that my story is just avoid trading Tesla inside days. So this was an inside day and I knew that, but we had a really good move here. I should have just taken my money and run, and then I got back in it. And that was a poor mistake. So part of what I'm looking to do in my theses is psychology and helping to understand, you know, how to trade when you're, especially if you're trading in a small account. But fortunately for me, I have options, and so here was a really good move here. So this is Home Depot. We talked about this yesterday as well. We set up this account, and I do recall saying, yeah, I don't think it's going to trade back down to 295. Well, yeah, wrong. But because we set up our day, now if you guys remember when I drew these out, I didn't have my drawings on, and so it didn't cover the other time frames. But we drew this on the 90, so you can see this on the 90. It hit it right to a T. Here was our broadening formation. If you recall, when we were talking about this, I said, you know, Home Depot's got to get through all of these outside bars. And so we just use that as an opportunity to draw our broadening formations. And you can see this came later. So we drew it here. This was a two down on the 90. We had this bar, right? So that was trading down. This was trading up on this yesterday. I guess it was Monday's range. Then we had this two up bar. So we said if a price trades above here, above 300, so that was this line here, we would look to go long. But this was a gapper, guys. You can see where the open was. This is the open at 306.50. And so when we did our video yesterday, we talked about it probably gapping above or around its average, a daily average, right? Average daily range. So with that in mind, we have to be careful that we don't get a reversal against us. And that's exactly what happened. This was the upper broadening formation we drew on the outside bar here to here, right? And then we had another one here to here. So these are all these outside bars. And then we drew from this, because we knew, right, it was trading inside this range. It had to take this out, which is also in this range. So we drew our broadening formation from the high of this bar to the high of that two up bar. Okay. And so what did it do? Hit that high of that bar and came straight down. So let's look at this. This is where I took my entry on this shooter on the 18. So I'm watching here, this put in the high of the day at the top of that range. Then we got a shooter on the 18. I took this low of this bar here, right? This triangled up a little bit on the shorter time frame, came up, continued down, traded right back down to this range here. And where did I get this? Where did I get that line? Hang on. Oh, that's this 3 bar here. Yeah, here we go. Outside bar on the 90. And it traded right down to that outside bar here on this 90. Traded down, took profit, came back up. I did not take this to the upside after it traded down on this 90. Big mother bar here. I did not trade it back up, but you could have. Now here's what's happening right now. Price is trading back down. You see here in pre-market 295 because of Target and Lowe's. So those are going to be our gappers for the day. So let's take a look at it. So Home Depot was a great win. Again, because I primarily trade reversals, I need to stay out of Tesla on an inside bar on my small account, but I primarily trade reversals, guys. And so someone had asked me about, you know, some trade that I had made. It was Apple last week or so, and saying, you know, if I had been trading in time frame continuity, maybe I would have held Apple. And my response was, well, Apple was choppy. It was a bad trade. I didn't like it. But you have to understand that when you're trading reversals, you're not always trading in time frame continuity. And that was really my message to him. I said, I don't trade time frame continuity because I trade primarily gap of reversals. And so that's why we talk about them. When you have a volatile market, as we do, you want to learn how to trade those. So that's why I'm sharing this today. But you can certainly wait until the first hour is completed and then draw your broadening formations and look for reversals intraday. We draw these up in the mornings because we're looking to take advantage of the market in that first 90 minutes. Okay, so that's really why I do what I do, but you don't have to trade that way. Okay, but so let's look at Target. Big disappointment. Big disappointment. Ah, yikes. Let's see where it's trading at. We're gonna have to go down. Let me remove my lines here. All right, so Target earnings was a disappointment. They missed, oh, come on. All right, so they missed on the bottom line. So revenue was up 715 million, looks like, but they surprised to the downside on the earnings. I think they're getting hit by some cost, both in consumer pricing, maybe wages, not sure, but they're certainly getting hit by consumers and the inflation they're stating. So with that in mind, we have to go to our daily. Let's look at this because it's trading. Gosh, guys, it's trading way back here now at the gap in March of 2021. Okay, let it catch up. So let's see how we can chart this. Let me just blow this daily up. No worries, Tanya. So gappers are simply when the market gaps above or below the previous day's close. And in this case, yesterday closed at 215.28. And so price is trading in pre-market at 168. So it has gapped significantly below yesterday's close. And what I do is, and I use TradingView, so I have my screener here, and I have basically said, show me stocks that have gapped, right? So pre-market, the change in pre-market is greater than 2%. So here's my query. Outside, so basically plus or minus 2%. So either 2% above yesterday's close or 2% below yesterday's close. And then I like volume of at least 3 million and average daily range of 2, but the average daily range. So that's what we're looking for. So I scan for those gappers. Why do I do that? Because when you're trading options, you don't want it, and like here's an example of Target. You want to avoid trading stocks in these tight ranges. The reason Rob's strat works, the strat, and I think a lot of people misunderstand, is the strat is really the reversal strat, right? He designed this strategy to trade reversals, and so you'll hear him talk about Rev Strat, which is simply reversal strategy. There are two continuation patterns as well, but the strategy was initially designed around reversals and how do you profit from it. That is very similar to Steve Neeson's candlestick patterns, where, and I talk about this in my Benzinga Binga video, and I've gotten way off base here, so I'm going to get back to this, but thank you, Tony, for asking that question. But the way I trade it is I look for my broadening formations price to trade to those broadening formations and then reverse off of those. If they gap and trade below those or above, depending on the direction. So gap up and trade below those, the trend lines that we've drawn, I'm looking to short. If they gap down and trade up above those trend lines, I'm looking to go long. But I added the commodity channel index, which is CCI that you see here, to help gauge whether or not that's a trade I want to get into. All right, so right now, Target is actually trading below this range here, 174.61. I'm sorry, 166.83. So it's actually trading below this range here in pre-market. So we're way over here in November 2020. So what I'm going to do, since it's right at this range, I'm going to draw this broadening formation from that 2 down candle. That's below it to this 2 up candle, next lowest candle in this range. All right, so that's going to be the lower broadening formation for this range. All right, so this daily range right here. And since it's gapping and it's already there, we're going to draw another broadening formation. Let's see if we can draw here. Nope, nope, that's too low. That's still too high. Let's see, this is, we'll draw it here for this 2 up candle. I was trying to draw it here, but I don't have another candle lower than that. Hang on, that's higher than that. 164.55, yeah. Yeah, all these are lower. We'd have to go way back. 2016. Nope, not going that far back. So let's draw this way. Let's see what that looks like. All right, so we're going to draw it like that. Here's what I did. So I drew this broadening formation from the low of this candle. Why? Because this is where it's trading right now in pre-market. And I took that to the low of this candle. So this will be our target if price continues to, so if it gaps at the open and trades lower, this will be our target, and maybe we see it hold here and a reversal to the upside. Now I drew this broadening formation from this 2 up bar because again, you're inside this range right now. So I drew this from the low of this bar, so this 2 up bar, to this outside bar because you're inside this range. And because there's not a bar lower, so we would have to go here, right, for this 2 up bar to get a bar higher. We'll do it to that outside bar. This two up bar here to get another broadening formation. But what we did here was we didn't draw it to the downside, we drew it to the upside, meaning I went 2 up to this outside bar, and this angle is now here. So what does that mean? Price is trading inside this range. So this would be the upper broadening formation for this outside bar here, if you can see that. All right, so this is a 2 up and this is an outside bar. We drew this broadening formation, so this would be that upper broadening formation for this range. Let's see if I can mark it so you can see what I mean. This range here. Let's see if I can do this without changing. All right, let's see. Did I keep? Yeah, it stayed pretty much. All right, so that's this range. So what I'm looking at is If price gaps, so it's right here in this range that we just drew. If price trades down, we're looking for a potential reversal here, and this would be our target. Okay, so that's why I drew that this way, because it's such a big gapper. Let me delete that. It's such a big gapper that we're looking, let's go back to, it's gapped. What's the percentage on target? Whew. 22.5 to almost 22.75% is this gapper. That's on a percentage basis. So it's significantly more than its average daily range, right? So now the question is it going to reverse here? And so that's what I'd be looking for. If price hits this range and trades back up, I'll look for a reversal. Okay. Yeah, thank you. I have my drawings on. All right, so let's go back. And so that's going to be way down here, guys. Okay. All right, so that's how I'm going to trade target. Let me see if I want to draw another line here off of this. If it trades above this range here, again, it's such a big gapper. What I'm going to do is I'm going to just tag that here. Draw this trend line on this low, because it's got to come back inside this range here. This is the gapper range. This will be the next low, I believe. Yeah, if it trades above that range. 176, I think, is covered. Yeah, this is 17. Here's the day, 178. Yeah, so so that's how I'll play. Excuse me, play target. I would be looking for reversals if price. So let me document that here. So if do it on this 18-minute. If price trades down to, let's call it 162. If price trades down to 162, look for reversal. With CCI crossing above -100 on 18-minute. That's how I'm going to trade that, guys. So essentially what I'm saying is it's in this range. If it hits here, because it's already at 166, if it opens, trades down, reversals, comes back up, I need CCI to confirm. Obviously, this is yesterday's close. So if you are charting this yourself, if CCI, which it will, it's going to trade below -100 on this gapper. I'll be waiting to see if CCI crosses back above for potential signal. It may be a scalp though, so just be careful with that because it may not go as far as this, because this will be our target. Which is about 177. That does not mean it's going to trade back up to 177. So just be careful, because this in and of itself is a 15-point range. So it may be a scalp. Don't look for it to continue unless there's some support from the broader market. Let me delete these old lines here. Lows is not as big of a gap as you can see. Let's see how missed on revenue. Home Depot's taking all the money. Home Depot was a slam dunk, but it didn't trade well. And Lowe's, on the other hand, missed on the revenue line, but bottom line, they were still profitable. But here's what you have with Lowe's though. I actually don't like it. So probably won't trade it. You guys know I don't like these outside dailies. This is a big range, 199, 187, so 12-point range almost yesterday. So it's still trading inside that range though, guys. So the way I would look at lows, we'll draw broadening formations. I'll do it on this outside bar here. I could have drawn it right here. Next 2-down bar in that range. But you have this big outside bar here. And so, no, we'll draw it to that 3. This outside bar to this outside bar. So this will be a little tricky. So this is your broadening formation. I mean, like I said, you guys know they have to make this easier for me. So this is, yeah, we'll just leave that. And so you have outside bar, outside bar, outside bar, outside bar, outside bar, choppy, choppy, outside bar, outside bar. So this is a pretty tight range. If you were to look at this on a 3-day, what's this, May 20th, so we still have a couple more days, yeah. I don't like this. I don't like this range. I would look to go long if lows traded above yesterday's range. Short outside bar here at 180. A couple outside bars, but you get it's inside this range here, guys. Let me just draw this on this 3-day, and I know I'm probably more confusing than ever because I use so many different time frames. Can we get this here? That's lower, that's higher, much higher. I'm gonna take it to the high of this 3-bar. All right, so let me look at it on a daily so as not to confuse you. This is where I drew it. So I did it from this 2-down bar here. And it didn't go. We'll take it to that up bar. Okay. All right. So this is on the daily. We're going to take it from this from this 2-down bar here to this 2-up bar here. Next highest bar in that range. And that's the low here. 184.58. 49. 85. Okay. Yeah. All right. So to this inside bar. So the low of this bar to this inside bar, next lowest bar in this range. Okay. So let's look at this real quick. How will we trade this? So again, like I said, this is a tight range. So yesterday was a nice move. It traded with Home Depot, as you can see. But now looking at this outside bar here, I'd like it to trade outside this range. I won't touch lows if it trades inside yesterday's daily range. It needs to trade 2 down. If it trades 2 down and comes back up, I'll take a look at it. And then you've got to combat these 90-minute bars here, but you can see this big mother bar is on a 90. So I would be careful with this trade. So the way I would play it is if it trades outside this range and come back up, so reversal off of this bar and back to the upside, then maybe I would consider it. And then we would just draw our broadening formations to trade back inside this range. It's because it's got to take out this level this level, this level. This is an inside bar. So the way I would look at it is if Lowe's traded down and comes back up, I would look for a reversal off the lower broadening formation. I will not trade this if it stays inside this outside bar on the daily. So I want it to go. So essentially what you're looking for is to go 3, 2 down with the potential 2 back up on the daily. You follow me? So 3, 2 down. So if it stays 3, 1, you wait for tomorrow for a potential trade on Lowe's if it stays inside for the day. Okay. All right. I'm going to wrap up live here and then the video, and then if we have questions afterwards. So let me just end with my favorite scripture, Proverbs 21:5. The plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. Again, with the volatility we are seeing in the market, there is absolutely no reason to chase trades. The market will tell you what it's going to do generally after the first 15 minutes. It will either trade to continuation, it will stay inside, or it will reverse. And so we wait for those that 15-minute close to see if it's put in a high or a low for the day, and which is especially why I like trading gappers, because you have an opportunity to profit from the market in that first 90 minutes, then potential reversal at that flip. This was at 11:30. You see it went inside here. This is Lowe's, but you can see price action went inside at 11:18 flip. Yeah, cross back above -100, potential to go long. So just be careful, guys. There's always opportunities in this market. There's no need to chase trades. No need to get the FOMO. Okay. Thanks for watching. If you like my videos, please subscribe to my YouTube channel. I appreciate it. Take good care, everybody. All right. So